do you think the sell down today is overdone?
Well, to answer your question, Emily, what I believe, I'm a believer of share price is always your best buddy. As we all know, share price may not be the good fortune teller, but always a good storyteller. In fact, Alibaba share price plummeted more than 10%. And in fact, whereas at the same time, you've just mentioned JD.com did very well today. Amid concern about, you've just mentioned, antitrust, also monopoly, and also like last quarter, Alibaba pay a big fine equivalent to 4% of its revenue back in 2019. So in fact, you can see like the big shopping day, November 11th, basically no one are talking about this day anymore. So GMV is not something that like the previous target every single time, like 5 minutes, or already surpassed like in the past year, and so on. So no one talk about the GMV anymore. In terms of like the antitrust and also cybersecurity issue, China actually fined not only Alibaba but also Meituan. In fact, when we compare all those internet tycoon, their earnings, like we can see on the screen, like Baidu, also missed analyst forecast, no matter top line or the bottom line. Alibaba also missed top and bottom line. Only JD.com managed to actually not really good, but I would like to point out one more thing why JD.com share price performed very well this morning. Because the Hang Seng company, the Hang Seng Index company, the index operator, will announce their quarterly review after market close today. In fact, JD.com is not yet Hang Seng Index components, but when we're talking about its 1,000 billion plus market cap and so on, it may be, will be, probably, I cannot say 100% guarantee, but probably will be included into the Hang Seng Index. So this is also one of the reasons why its share price outperforms quite significantly in the last couple of days, amid concern about an antitrust lawsuit and everything, and also the slowdown of the Chinese economy.
Would you be adding to a position in Alibaba then on the back of this pullback that we're seeing, down by about 10% today? And do you think that expectations out there are perhaps a little bit too lofty for some of these companies, given the crowded marketplace that they're operating in?
Definitely, Matt. Indeed, this is not an easy question for me to answer. But I will say, if you ask me, is it a good time to buy Alibaba at the dip? Probably not, because I won't buy a stock like at the dip. I don't want to catch a knife, okay? And second of all, is it a good time to buy like JD.com after its earning result and announcement, and also the expectation it will be included into the blue chip? I guess not, because it already reflected the share price now up 7%. Whereas I will give some kind of like an idea for investor, or investor want to participate into those internet tycoon in mainland. Why not buy some like ETF that focus in Hong Kong, like the tech index? I guess it's a better idea, because no one knows. As I've just mentioned, regulatory risk is always the top risk. Like we have suffering not only the tech industry, not only the cell phone game operator, not only education, but basically every single sector can be heated or regulated by the Chinese government, may impose new rules, new tax, etc. So in terms of you bet your money into one single stock, why not you buy a whole portfolio in an ETF to follow, like the Hang Seng Tech Index? I guess this is a safer play at this moment.